Hey, good morning. This is my morning brief video, people. Thanks for watching my videos and everybody giving me great feedback and stuff. Even a lot of times I get direct messages and stuff, so you guys don't really see it in the general public. But I've been getting a lot of good positive feedback on my videos, and I really appreciate that, guys. So bottom line is what we did on the ESs, we have a volatility box that we fought for a long time. It was just absolute chop. We finally broke down as of Friday, or as of, well, let's see, this is 2 days ago. We broke down, breaking out of a 6 month low period here on the ESs, and then we just completely capitulated yesterday morning. And basically, what you can see here using my center of gravity study, every time we get into the green area, that tends to be a capitulation zone. Okay, that's been that way for some time now, and that's basically exactly what we had yesterday morning. We came in the oversold scenario, and they just ripped your heads off on this. Basically, coming back, they're back testing the breakdown of the volatility box. Honestly, I don't know what's going to happen tomorrow. I really don't. So basically, we look below. Now we're back testing it in a really short time frame. I would have much rather seen a longer time frame for that back test. That suggests to me that it's probably going to have a little bit more legs to the upside. Unfortunately, I hate to say that, but because my targets are still further down to the downside. So, but it is what it is, and we have to trade what the markets give us. So, but at any rate, that's one of the things I was looking for. I was coming into yesterday morning. I was actually looking to short volatility, but I came in a little bit late. And as I could see, really early here, I had thought the night before that we might see VIX as high as 44. And we didn't get anywhere near that. See, we got up to 37. I was actually thinking as high as 44 before they capitulated it, and they actually topped it out a lot sooner than I expected. So basically, we got the overbought on the VIX, in the pre-market there, and they just completely capitulated in our face on that. So similar as what we had before. So that is some of the see. That's one thing about VIX, with the center of gravity. If it has just a steady climb and doesn't get in a real bit overbought situation, you have a better odds for those higher prices. And that was another tell that the markets were not confirming a sell down early on yesterday morning. I didn't know for sure at first. A lot of people were asking me my opinions, and I couldn't really say anything because where we were at. I mean, it just looked horrible when we came in yesterday morning. And wouldn't you know it, they saved it. It's amazing. And this turns out to be one of only three scenarios like this ever in history. Uh, so keep this in mind here. The scenario being breaking below a 6 month low, with coming in with a more than a 2% loss in the markets and completely bringing it all back. And there's only been three periods in history to do that. So both those periods, one of them we continued a trend upward after the fact. It digested sideways for a few days and then it continued higher. Okay, and then the other one, they actually climbed for a couple of days and then it just started a very long bearish market, bearish downtrend. So you got completely mixed signals off that indicator, so I can't really make much about it. So I am thinking, assuming the news don't get much worse, that we're going to be dojiing out tomorrow. I don't think the markets are really ready to decide whether or not we are going to go off rocket ship to the upside. So we will see here. But here's what I am pointing out here. See how we are just right on that upper band, even here in the in the overnight session. See here, how's that look on the ESs? That was SPY. Okay, is that the same way on that? Let's see here. Yeah, so we are rejecting our upper band. So so the bearish trend is still intact. Okay, so I do want to float that out there. You know, everything about this, the bearish trend is intact. So I'll be watching my indicators for tomorrow morning. If we start breaking above that band, of course, I'm going to be looking to the markets to the upside. Okay. But obviously, we're hitting a solid wall of resistance, in my opinion, so far early. It's 1 a.m. in the morning, so we don't even have Europe open yet. And plus, Europe's got to play catch up tomorrow, first thing tomorrow morning. So obviously, Europe's going to have a bid tomorrow. because of the massive gamma squeeze we had after Europe closed, and they're probably going to do a little bit of catch up, assuming the news isn't too horrible going on in the Ukraine mess. But they are the closest and most direct impacted from what's going on. So that like I said, their bounce in the market might just be a little bit more fleeting than what we saw in our markets. So bottom line is tech saved the market yesterday, period. We saw it right out of the gate. You can look at Microsoft, especially Microsoft and Apple. They just took off right out of the gate yesterday morning, and that's what saved this market. So basically, we are going into a tomorrow session. We are above those signals on the 1 hour. So I do want to float that idea. Tech was what led us up, and we do have a potential bullish continuation based on my signals. But, it's still a little bit early here. And so I do want to float that out there. And if I look on the Qs, is it going to be looking the same on that one? Qs. Okay. And the Qs. And there you go. Same thing. Bullish continuation scenario. Definitely that's what I'm seeing here going into the overnight session. Like I said, SPY, it's a little bit iffy. But basically we had the gamma squeeze of all gamma squeeze that hit the markets yesterday. So I'm not going to make this video too long here, but a scan that I use in the morning to give me a better idea of how the wind is blowing right out the gate first thing in the morning, and we could see right out of the gate yesterday morning now that there were some big techs that the implied volatilities were getting crushed right out of the gate. And that suggested to me that your TikTok chart, which deals with the 5 biggest tech stocks, they're the ones that tends to, have a lot to do with the market direction, during the rest of the trading session. They were all catching a bid right out of the gate yesterday morning. And so, that was a pretty good indication that the Bears were going to get run over whenever the biggest of the biggest were getting massive bids right out of the gate. It was not a good scenario for the Bears right out of the gate yesterday. So basically, I got these 2 scans that I use. I detach them. I just load them up and detach them from my platform, TOS platform. One of them looks for increases in volatility, and another one looks for decreases in volatility right here. Okay. And then I just use the default weeklies scan. That's one way of doing it. That gives you just about everything, And the good thing about using the weekly scan, then that gives you by seeing the total number there, it can give you a little bit better idea how the early market breadth on volatility is behaving. Okay, so you're not only getting by having this scan, you're getting a little indication on market breadth, but also implied volatilities with that all on one scan. So I think it's a really useful tool if you use this, and it's really simple to make. Basically you just duplicate what I got right here. Another thing, what I'll typically do I got another set I'm working. Instead of having weeklies, I just look for the top mega cap stocks. So I just did a search for about the 30 top market cap stocks on the New York Stock Exchange, and I put them all on one watch list. And then I put those on these 2 scans, and that gives me even a better, a more zeroed in of where big money is placing their bets during the course of a day. And so that's a really good tool, which I'm sharing with you guys, that can help you identify which way the wind is blowing, and you can keep yourself on the right side of the trade. So a quick rundown on these megatech stocks. So we right here on we managed to go on the 1 hour right to our bull bear cross line. Okay, guys. So we closed the session right on our bull bear cross line. Basically we got a major gamma squeeze. We took it right into trying to decide whether or not they want to ultimately take it bullish the rest of the week. So this is not a clear sign that we're out of the woods yet. I have to admit, we are still very much in the doghouse here, guys. So, Bank of America, what's hurting Bank of America? There was all kinds of money around the world flooding into U.S. Treasuries, driving down yields and pumping up the bonds. And this is not, the whole narrative for the banks. They were going to get this great big interest, all these interest rate hikes out of the Fed, and it was going to be a big driving force for the banking system. The banks are up over 100% since Biden's been in office, and so there's a lot of things there that drive it. Obviously, this thing's closed extremely weak, so that's a really bearish signal that the banks are closing that weak for the session. Okay, guys. That's why I'm not too gung ho about this. Nvidia was one of the strongest techs, so we did close right above our signal line, and we are in a downtrend. So that was one of our stronger techs for the close here for a possible continuation higher here. Microsoft, really right out of the gate, just rocket ship right up. It was the strongest based on our short term reads here. So they had the gamma squeeze of all gamma squeezes here on Microsoft. This is probably the one you want to least short short going forward, in my opinion. But I'm not for sure which way the wind's going to blow tomorrow. I'm going to try to come in tomorrow and try to figure it out as the day goes on. But yeah, this one here really one heck of a nice move. Then we just had basically a massive short squeeze here on Facebook. Facebook is just, in my opinion, the doghouse, and it's in all kinds of trouble. So be careful with that one. I'm not a big fan of Facebook, so and so just keep that in mind going forward here. Based on these, see how wide our things are right there. I mean, I think it's just going to need a lot of time there to work off some of the down pressure here on that one. ExxonMobil came in a little bit. When with the rotation out of energy a little bit because everything was going back into tech. So remember that going forward. Typically that's what happens. If the money doesn't tend to go in energy and in tech at the same time, they tend to be a little bit more inversely correlated than a lot of other sectors. Just be aware of that. Tesla came down to 700. 700 is actually the yearly volume point of control. It bounced right off of it yesterday morning. Rocket shipped up. I think it's a really ugly chart. In the longer term time frame, I have a price target of 550. So only time will tell on that one. Baba had its earnings, got crucified on their earnings. This one here in a few days, I would not be surprised. We're going to be up here in the 127 areas if the markets do stabilize here. This is one area here I do think could see some a nice little short squeeze in the not so distant future, in my opinion, on Baba. Taiwan Semiconductor, it's like all the other semiconductors, getting a little bit hit here. Okay, really, really bad close here for Taiwan Semiconductor. JP Morgan, another bank, really bad close. Visa. Visa we're still not even back to our midline on that one. Still a pretty weak close on that one. Procter & Gamble, very weak close on Procter & Gamble. J&J, very weak close on J&J. Walmart, so yeah, very weak close. And if you can see what I'm seeing on these monsters of text, most of these, even with the massive rebound in the markets, they're not even getting over their midline, the mid yellow line on my scans here. So I tell you, there's still a lot of repair work to be done here. MasterCard is a little bit better, it looks like. Amazon, like I said, the monsters of tech, they're the ones that got squeezed the hardest, and that's what's really saved the market. UNH really looks bad, and then Google, that's one of the better ones here as far as Google goes. Google's right at the top of the range here. So bottom line is they use tech to support the markets, and I'm not so sure that's going to continue. So we'll see what happens here. It's the belief that money is going to stay in treasuries for longer, and for a longer period here because of the turmoil, and it's going to give a natural bid in tech. That's exactly what's going on under the hood here. Okay, that's and that is a very risky proposition in my opinion. Slash the end. Did money even start coming out in the overnight session? Yeah, see, we're already negative on the bonds, so that whole squeeze on tech could already be coming off. Keep in mind on this, you want your techs your bonds rallying, rallying hard to support that tech thesis. And we had to sell off all day today, and then we're selling down near the lows into the close here. None of that supports that whole tech. So be really careful on this move, okay, guys. Please like my video. Please retweet my video on Twitter. Please, 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 please. And leave comments below. I really like the feedback below. Even if I even want your insights. If you're seeing the insights, I'm not saying I do want to see it, guys. So I'm trying to teach you guys a little bit every one of these videos. Try to teach you, help you improve your your trading, and make yourself more successful. And this is all for free. So you can't beat what I'm giving you for free. So thanks a lot for listening, and I will see you in the trading rooms.